of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to another episode of the Business Standard Banking Show. I am Ruchika Chitravanshi, and in today's power-packed episode, we will talk about the IFSC Gift City in light of the recent budget announcements. We will tell you all about the National Financial Information Registry that the Finance Minister announced in her budget speech. In our Bankers' Views section this week, we have Indian Bank's MD and CEO S.L. Jain. And of course, we will dig into the RBI monetary policy announced yesterday with our banking expert Tamal Bandhopadhyay. At the end of the episode, we will also announce the results of the last week's poll and ask you the question for the next one. Finance Minister Nirmala Sitharaman announced a slew of measures in this budget to boost the International Finance Services Centre at Gift City. With many hiccups now out of the way, the Gift City is expected to become more attractive to banks and investors. Is it the take-off moment for Gift City? We asked the experts. The Gujarat International Finance Tech City or Gift City is situated in the Gandhinagar district of Gujarat. It has India's only international finance services centre. The Gift City works like an offshore jurisdiction. We can call it a country within the country. But there have been many regulatory hurdles, but Budget 2023 has given it a major fillip.
Every financial center, has its journey of evolution, right? And, things don't happen overnight. So I think every small step, is helping the cause. International investors have to be comfortable with, with IFSC, with the regulatory framework, with the tax framework. There is always proof of the pudding, right? So I think that as people set up, more and more businesses in Gift City, as you begin to see businesses booked in Gift City, I think that, it will take off.
Several regulatory measures are now expected to smoothen the ride for Gift City, which could set the stage for its takeoff. The 2023-24 budget permitted acquisition financing, recognized offshore derivative instruments, and set up a single window registration for approvals. It has also provided acquisition financing by units of foreign banks set up at the International Financial Services Centre, a move that will bring down the cost of financing for outbound mergers and acquisitions. The concept of a data embassy has also been brought in. The offshore data centres could insulate countries from terror threats. It could be used for disaster recovery, or it could be a critical database. But are all these measures enough?
Though you can't say that they have met the expectations of the investors or the foreign banks or the investment or the units at the IFSC, but then I would believe that those have been largely addressed, and there are obviously certain limitations at the end of the government to address to. Possibly the biggest challenge was to make IFC at par, if not better, than the Financial Services Center in Hong Kong, Singapore, and Dubai.
Banks can now undertake acquisition financing and thereby provide funds to their units in the IFSC. The establishment of a subsidiary of Exim Bank for trade refinancing has also been allowed. Dual regulation has been done away with by delegating powers under the SEZ Act to IFSCA.
So that would also, help in doing the ease of business to a great extent. Now, what more needs to be done? I believe the sky is the limit. And but if I can sum it up in a one or two sentence, is that we have competitive international financial services center in Hong Kong, Dubai, and Singapore. Now we need to be at par them, or we need to be better than them. So what they have and what we need to do. And the investors are more lured at the same time by the taxation advantage.
Experts feel much more can be done in terms of taxation to make India's IFSC competitive with those of Dubai, Hong Kong, and Singapore.
Much more can be looked into if the industry's expectations are to be met in terms of the income tax, whether all the income should be exempted, whether some of the business income should be exempted, and possibly, to me, the best guide would be the comparison with the authority with the such centers in the Dubai, Hong Kong, and Singapore.
Experts agree that the building blocks are in place for the IFSC Gift City, and Budget 2023 has only helped. How it works on the ground is yet to be seen, as Tejas Desai puts it.
The regulatory framework, I think, is world-class. The tax framework is in place. I think it's a question of, everybody getting used to it. Of course, there is also the issue of, physical presence required in Gift City. And I think every financial center, the ecosystem will take time to mature. So I think it's a little bit of a chicken and egg to say that, look, does the ecosystem come first, or, do the people relocate first, right? So I think that is going to be a bit of work in progress. We'll have to wait and see how that pans out.
A lot of hurdles are indeed out of the way for the Gift City. There is a lot of momentum, and we should see some action soon. Moving on, the public sector lender, Indian Bank, which came out with a robust set of numbers in the December quarter, says that it will continue to grow its credit at 13 to 14%. Our banking editor, Manojit Saha, spoke with Indian Bank's MD and CEO, SL Jain, on various issues.
Welcome to the Business Standard Banking Show. Public sector lender Indian Bank announced its Q3 numbers recently. Its net profit doubled to 12 to 25 crore. Its asset quality improved, and there was adequate provisioning that helped net NPA to dip to 1%. We today have the bank's MD and CEO, Shantilal Jain, to talk about the bank's performance. Mr. Jain, welcome to the show.
Thank you.
But let me first ask you the issue which is dominating the headlines these days. It's about the Adani Group and the bank's exposure to the group. Sir, what is Indian Bank's exposure to the Adani Group?
So account-specific discussions generally we do not do, sir.
Okay, no, since some of the banks have said that, like PNB has 7,000, SBI has 21,000. So I just trying to understand, is there a substantial amount which is there, or?
Not substantial amount, but account-specific discussion we do not do.
Are you worried in any case, or things are still okay?
Things are okay, sir. Absolutely no issue with us.
Now come the numbers. Coming to the Q3 numbers, the loan growth as on December 31st was slightly below the industry growth trend. What could be the reason? Are you kind of cautious on business growth?
Well, if you see our growth, our RAM growth is 12%, right? And YOY we have grown 13%. Under RAM, the retail we are growing 15%, but all components of retails are growing between 12% to 25-27%. Likewise, in agri, all components are growing. MSME, all components are growing. In a corporate, our growth is less, 7%, because of the interest rates. We continue to remain selective and choosy for corporate accounts based on the margin available in the account. If the interest rate suits us, the margin suits us, we are going ahead. Otherwise, we will be continuing growing in RAM. And you see continuously from last 5 quarters, 6 quarters, 7 quarters, you see bank is growing in RAM 12 to 14% continuously. And that is our strength. And our RAM is 62%, highest, one of the highest in the industry. And that is shows our stable balance sheet and stable profitability of the organization.
What are your growth projection for the current financial year, credit growth projection?
We will continue to grow with around 13-14%. As we were growing all along.
And what is the growth strategy for the next years?
Our growth strategy is basically in retail, we are growing. In agri, we are growing in all segments of the agri, whether it is a crop loan or a gold loan or a SHG loan or an investment credit. Likewise, in retail, whether a home loan, auto loan, education loan, personal loan, jewel loan, all these are growing and will continue to grow in that speed. In corporate also, wherever we are having good margin, we will be growing that also. And we are having good liquidities, and therefore we can grow.
Right. So next financial year also you are looking for a similar growth, 13-14%.
Same way we would like to grow.
Now coming to the deposit side, the CASA growth was a single digit. CASA is also very important for the margins. I will come to margin in a bit. What are the plans to improve your CASA growth?
We are, as far as the domestic side is concerned, we are maintaining 41% CASA. Of course, after considering international land, we are at 40.4%, right? Bank as a whole. And basically what happens, the interest rates have increased the market. So people who were having deposit in a say saving account and partly move to a term deposit and other. Second, what happens in the third quarter, generally what happens is the festive seasons and all, people will incur more expenditure is against keeping in the account. Now what we are doing is, now we have started a war room in our corporate office and various relationship at our Lucknow or Calcutta or a Chandigarh or a various places where for government relationship we have created a separate vertical. We have created a teams for growth in deposits. You must be reading in papers and all, sometimes in the morning, sometimes in the evening. We have started opening account through tablets. Around last month, around 57% of the accounts were opened through the tablet. The purpose of opening account through tablet is that you can go to the institutions, organizations account, because not many persons are coming to the bank for opening the accounts. So by going to their places, you can open a salary account. We open a salary account of organizations. If you go to the family, open a salary account of a saving account of the families and all. So in the last 9 months, we have opened around 27-28 lakhs new accounts. So we are focusing on deposit growth first. Second is that you see last year my deposit growth was 10% last year.
Right.
So last year in terms of amount, our growth in deposit was 56,000 crore. Whereas the growth in advance around 26-27,000 crores. So excess liquidity we were carrying in the last year, right? So that liquidity, if we are this year, what happens, just opposite. So this liquidity we have deployed for credit. So now going forward, we will be totally working on that increase in the deposit base.
Coming to asset quality, significant improvement in asset quality was made with net NPA hitting 1%. PCR is almost 85%. The street expects the further improvement in the NPAs because recovery from lumpy accounts like swaying and INFS. What is your take on this? When do you think some more recovery could happen?
You see our recovery of this December quarter or a June quarter or a 9 months. December our slippage was total 1,300, right? Recovery was 2,600. So recovery was higher than the slippage. Right, higher than
more than double.
Double, it is double. If you see year as a whole, our recovery was 6,500 crore in 9 months, and the slippage of 5,300. Here in 9 months also we are higher than. So when your recovery is higher than slippage, naturally, two benefits you will get. First, your asset quality improves. At the same time, your provisioning burden will come down further for the P&L account. So based on the recovery trend which we are having, and you see at the beginning of the year we said that we will recover 8,000 crore, 2,000 per quarter. So in a 9 month we have recovered is again 6,000, 6,500. So 110% of the target which we achieved, and we hope that this quarter also we will be able to recover 2,000 crores, and slippage will be naturally.
This quarter we will be able to recover.
We hope that this quarter also the recovery will be better than the slippage. This is an ongoing process of around 25,000 crore of a book where is in NCLT, right? So the resolutions takes place time to time and we are getting money. And you see as the provisioning part, our provision coverage ratio is 93.5 and 94%. So the recovery, whatever the recovery is coming to my P&L.
Mrs. Jain, thank you so much for speaking to us. It was a pleasure talking to you.
Thank you, sir. Thank you so much for having interest in the bank and kindly keep supporting us.
Thank you. Thank you.
It is interesting, though understandable, what Mr. Jain said about areas where bank would be growing, such as the agriculture and MSME sector. It would, however, be selective in growing the corporate loan book. Our Banking for You segment today is about the National Financial Information Registry, a single platform with everyone's credit information, from a large company to an individual like you and me. What is the purpose and how will it work? Watch Raghu Mohan's report.
In her budget speech on February 1st, Finance Minister Nirmala Sitharaman announced that the government would set up a National Financial Information Registry or NFIS. The move to set up the NFIS will fundamentally alter how credit is dispensed in the country by cutting down on information asymmetry. The idea was first flagged by the high-level task force on the Public Credit Registry of India. It was set up under the stewardship of the late Y.M. Diosthali, ex-chairman and managing director of L&T Finance Holdings. Unveiling the plan for the NFIS, Finance Minister Nirmala Sitharaman said, "This will serve as the central repository of financial and ancillary information and will facilitate an efficient flow of credit, promote financial inclusion, and foster financial stability." A new legislative framework will govern this credit public infrastructure, which will be designed in consultation with the Reserve Bank of India. As of date, the collection of credit data is highly fragmented. You have RBI, credit information companies, the Central Registry of Securitization, Asset Reconstruction and Security Interest, and the Central Repository of Information on Large Credits. There are also information utilities that store financial information to establish defaults as well as verify claims expeditiously. They facilitate the completion of transactions under the Insolvency and Bankruptcy Code in a time-bound manner. It constitutes a key pillar of the insolvency and bankruptcy ecosystem. The other three being the adjudicating authority, the Insolvency and Bankruptcy Board of India, and insolvency professionals. While it is too early to speculate on the shape the NFIS will take, the structure mooted by the Diosthali Committee was to have a Public Credit Registry or PCR, which will centralize all credit information reporting and then allow stakeholders to access the information as per the permitted access level. The long-term view of the PCR would be establishing itself as a single window for the lenders to access all factual credit information stored within and other linked subsystems. The key recommendations of the task force of 2018 were as follows: to remove information asymmetry, foster access to credit, and strengthen the credit culture in the economy. A PCR should be set up by RBI. In due course, RBI may consider moving the PCR to a separate non-profit entity. The PCR should be the single point of mandatory reporting for all material events for each loan without any threshold in amount. The PCR should be backed by a suitable legal framework to achieve its objectives. Considering the broad scope of PCR, the project may be implemented in a phased manner. Data quality of information reported to PCR will be the responsibility of the reporting entities. The authority in charge of the PCR may be endowed with appropriate enforcement power to take action against any violation of rules and regulation. Borrowers may access their own credit history report from PCR. Access to PCR data to all stakeholders must be on a need-to-know basis only and have to adhere to the strictest measure of privacy and protection to sensitive information. The PCR should capture both positive and negative information for all loans.
I am the blue of the limitless sky. I am the inspiration that lets success soar high.
nation's trusted bank, SBI, the banker to every Indian.
The NFIS seems to be an idea whose time has come. Raghu's report suggests that this could also help in data localization and consolidating all the credit information. The Reserve Bank of India's monetary policy has come against the backdrop of the union budget and rate actions of the 4 global central banks. Our consulting editor, Tamal Bandhopadhyay, discusses the key takeaways of the RBI's policy announcement. Hi, Mr. Bandhopadhyay. So, the Reserve Bank of India's Monetary Policy Committee on Wednesday hiked the repo rate by 25 basis points. This was largely expected. What is your take on the overall policy?
Even though part of the market was expecting RBI could press the pause button, but largely it's on the line. As far as the stance is concerned, again, it continues with the stance of withdrawal of accommodation. There, I think there's a expectation of 50-50. Even if it doesn't go to neutral, there could be some more nuanced, but RBI has refrained from doing that. So it's kept all the options open, but I think it's par for the course. Both the policy rate hike, and this is, of course, one way of looking at it is this is the lowest, if you see, in the entire rate hiking cycle, which started in May last year. This is the lowest quantum of rate hike. Yes. So is this the end of it? I think we need to wait and watch. The governor has refused to comment on it. He has not given any forward guidance. But during the press conference, one word is, he says that we are optimistic. So that gives us an optimism. You never know. It could be.
Now, this brings me to my next question, that as you're also pointing out, it is widely expected that this is the last rate hike, but no such guidance from RBI. What do you think is holding them back from giving such an indication?
It's primarily the inflation, particularly the core inflation, which is a reflection of the demand in the economy. It continues to be sticky. And of course, the external circumstances. So one thing we shouldn't forget that, I mean, there was all around celebration when inflation came down from 6% for 2 consecutive months. But 6% is not our inflation target. Our inflation target is 4% plus minus 2 percentage point. So we had shifted the goalpost from 4 to 6. It's very heartening to see that Reserve Bank of India Governor Mr. Das is sticking to the goalpost of 4%, and he is determined to bring down the inflation to that level. And for that, whatever it takes, he will do. I mean, in as many words he says. That's the part of the external uncertainties. It's the high inflation, high headline inflation, and entrenched high core inflation. These are the factors.
But for the Q4 of the next financial year, the inflation projection of 5.6%, do you think it is on the higher side? Like there's a dichotomy there?
No, there's no dichotomy. Say on the inflation side, RBI seems to be more conservative than the market. In fact, it's higher than the market expectation, even for throughout the year, even the average inflation expectation also for the next year, particularly of the last quarter that you say. On the growth side, again, Reserve Bank of India is more bullish than what the market has been expecting. So
that's on the higher side.
6%. So, but if there's an interconnect, and it's in sync with, if you are projecting a higher growth, obviously the inflation also will be higher.
What about some of the other things that the policy talks about? Mr. Das has talked about rural demand going up, and the lending and borrowing of government bonds, etc., has been allowed. What is your take on that?
No, the other aspect, apart from all the minor things and all, I think it's basically addressing the liquidity and the depth of the government bond market. We have a record record government borrowing for the coming fiscal. Last year also it was record borrowing, but RBI has been able to pull it off without much hiccups. This coming year again, it will be even bigger. RBI is pretty confident about that, which is why you see the bond market has not reacted adversely. It's a very muted reaction. The rate action is in sync with the market expectation, but the stance remain unchanged, is not exactly in sync with the market expectations. Despite that, bond market has not reacted terribly adversely. It's a pretty muted reaction. So even though Reserve Bank of India has not committed anything, I think the market feels confident that RBI would step in, probably does some way more, that's open market operation, government bond buying, so on and so forth, to see it through. So apart from looking at inflation, keeping it in check, and talking about the resilience of the economic system, of resilience of Indian economy, it's on a footing. The third part of the story is the Reserve Bank of India is pretty confident about ensuring the government borrowing program.
Thank you so much, Mr. Bandyopadhyay, for joining us and sharing your thoughts on the monetary policy. That was Tamal's quick take on monetary policy. Last week, we asked you, have private banks done enough on financial inclusion? In January, Finance Ministry asked all banking entities to meet their financial inclusion and social sector scheme targets. The record of the private sector in this regard has been poor. The poll results were quite close. 51.9% of people who responded to our poll felt private sector banks had done enough for financial inclusion, while 48.1% thought they had not. This week, we want to know your views on whether the Adani crisis will affect Indian banks. Our polls open on Friday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.